Good morning, everyone. This is Daily Trading Analysis. The Federal Reserve hiked rates another 75 basis points today. Initially, we were good. This is the move that happened during the decision at 2 p.m. and we moved quite a lot, 250 points in the Nasdaq. And then what happened? I'm here today to bring you all the details for you to understand what exactly happened and why we tanked heavily. We are in the lows and the overall sentiment is super bearish entering in the last months of the year. This is the Federal Reserve statement that came with the interest rate hike decision. If we check this sentence, in determining the pace of future increases, the committee will take into account the cumulative tightening of monetary policy and the lag with which monetary policy affects the economy. So they acknowledged that the cumulative tightening of monetary policy will have increased effect, so all the past interest rate hikes will have a huge effect in the economy, but we will need to wait some time for these policies to take effect in the real economy. That was really bullish, and that was what markets were waiting for in this consolidation range after the initial push, and we were consolidating after that. So markets were waiting for the press conference during this consolidation phase. They started the press conference. So what happened then to cause this sell-off? Jerome Powell started the press conference saying that the Fed could step down to a slower pace in December even if inflation data don't improve much. Those are more or less good news. However, he continues saying that if there have been new estimates of the terminal funds rate released today, they would have moved up. And that's quite bad news, because in other words, rates will stay higher for longer. That's what caused this panic sell-off, little bounce, and the second sell-off. Then, one of the journalists asked if maybe in the near term, in the upcoming month, we will be seeing a decrease in interest rate hikes. Jerome Powell answered the question saying that they are not ready to talk about a pause anytime soon. In other words, rates will stay higher for longer. That's not great for risk assets, especially growth stocks, all these big tech companies, and speculative investments like crypto. So, the Fed's acknowledging the lagging effect of policy and baking that into its decision is a significant change in its communication. Until now, if we remember, the Fed said that they would rely on lagging inflation indicators like, for example, the PCE index, and continue hiking until the housing and labor markets were showing signs of a cool down. That created fear that they will continue hiking blindly until something broke in the economy, and that is not changing right now. At least they are acknowledging the limitations of their policy measures and they are outlining a more measured approach for future hikes. So the expectations for December are maybe 50 basis points before the pace really slows down further in Q1 next year.